Michael Zuber, one rental at a time. It is Sunday, November 27th, and yes, I'm trying to record this live from the roof of my hotel. Looks like we got some rain clouds coming in. So again, Sunday, November 27th, and these are the 5 things that you need to know about the daily financial news. First and foremost, we have to talk about the week ahead. A lot of important things are happening. So let's talk about them. On Monday, we have James Bullard, Fed president, who famously 2 weeks ago talked about Fed funds going to 7%. So he's going to be talking on Monday. So let's be warned that he is likely going to continue to be a hawk, negative. I suspect that the Fed does not like to see where the markets are going. They don't like to see that rates have gone down. So I expect James Bullard on Monday to be full throat negative. On Tuesday, we get the Case-Shiller index. Again, this index is 2 months old. It will show a declining appreciation rate, if that makes sense. Housing will be going up at a slower pace, but nonetheless still going up. It is nearly a worthless exercise, given that it is 2 months old, but it will undoubtedly be on TV. You will be hearing things like the decline is accelerating, things of that nature. In addition, probably more importantly, where you're going to get consumer confidence. Consumer confidence. Is it strengthening, weakening, plateauing? It'll be very interesting to see what's going on with the consumer. Wednesday is the big day of the week for me. We have a lot of stuff going on. First, we will get Q3 GDP raise or revised report. Will it still be positive? Next, we'll get ADP report for November. Remember, ADP report comes out before the November jobs number on Friday. Expectations are for 200,000 jobs created in the month of November. We will get pending home sales as well. Expectation for pending home sales is negative 5%. I do not think that is negative enough. Again, remember, we are in a housing crash in transactions. More on that later. And then finally, on Wednesday, and it's frankly why I think Wednesday is the important day, Jerome Powell speaks. Remember the last time he was in front of a microphone, he basically kicked the market in the nuts and said, we are going higher. We are going to stay there longer. I expect Jerome Powell to be full hawk mode on Wednesday. Thursday is the most important inflation number. Remember, CPI, PPI, all of these things are interesting. The Fed has told us clearly the one measure we have to watch is PCE core. We're going to get the PCE headline and PCE core reading. So let's remember, PCE core, that is why that's where the Fed funds rate has to get above. If PCE core, for example, comes in at 4%, I'm not saying it will, I'm giving you a for example. That is the number that the Fed funds rate has to get above, in my opinion. So we are going to get our latest reading on PCE on Thursday. And then finally, Friday, the jobs number. How many jobs are created? The over-under this Friday is 200,000. Expectation is that the unemployment rate will stay at 3.7%. So again, the week ahead is full of a lot of dynamics. We have a couple of Fed hawks speaking, Bullard on Monday and Jerome Powell on Wednesday. And of course, we get the PCE reading on Thursday, another big number. Let's talk about number 2. Let's do some inflation planning together. I think this is a very interesting exercise that I wish more people would do because, there are these people like Cathie Wood and Jeremy Siegel talking about inflation crashing. And then there are others saying inflation is going to be sticky. And then there's guys like me, hey, it's somewhere in the middle. Let's play this out together. Let's pretend for a moment that Cathie Wood, Jeremy Siegel are right. What does that look like? Well, my opinion, it looks something like this. Inflation crashes to 5.5% by March. It goes to 4% by May. Let's say that happens. What does the federal funds rate, what does the 10-year rate, and what does mortgage look like if Cathie and Jeremy are correct? Well, first, if inflation is falling at that rate, the Fed funds probably doesn't have to get more than 4.5, right? They will be sufficiently restrictive very quickly, probably as soon as February. So if inflation is coming down at an accelerated rate, the Fed could be done in February. All right, Fed funds 4.5. What is the 10-year note? I don't know, 5.8, 5.9. Where's the 30-year mortgage? Probably somewhere in the sixes, maybe low sevens. But the key is we have seen the high mortgage rate, right? That is over, that is in the rearview mirror. Now, let's flip it over. Let's assume inflation is sticky, it is structural. Let's say that inflation stays above 6% all the way until May. Remember, scenario one, it was 4%. Scenario two, it is still at 6%. Well, folks, we are going to get Bernanke. We're going to get a 1/4 point raise every meeting, maybe even a half. I think the time for 75 basis point raises is over, but we could get 25, 50 basis point moves at every Fed meeting until the summer. That could take the funds rate to 6. That could take mortgage rate or 30 or 10-year bonds to like 7.25. That could take mortgage rates higher into the high 8s. I think that is a very interesting discussion to have, right? Is inflation going to crash, or is it structural and we have a long time? On a positive note, number 3 thing that we have to think about is mortgage rates crashed. We now have 30-year mortgage rates at 6.58%. They were just over 7% 3 weeks ago. The 15-year mortgage is at 5.9%. So yes, folks, if you are in the market, you have gotten a reprieve on rates. I don't know how long this will last. It is just about the interest rate. We will know what is coming shortly. Next up, we have RedFin. RedFin put out some scary numbers the other day about housing or about the real estate market. Redfin reported that 32% drop in pending home sales. Folks, that is a crash, 32% collapse. 17.9% of contracts that were in escrow canceled, roughly 60,000. And then finally, number 5, we have Goldman Sachs. Goldman Sachs is out with a revised housing prediction. Goldman Sachs is talking about how housing is going to be, wait for it, flat for 2023. They were basically saying interest rate lock-in, what I call supply destruction, is going to hold. Unemployment will not go that high. And basically housing is going to be flat for several years to go. So again, folks, a lot of stuff going on in the news. That is my 5 things for November 27th. Just so you know, I will be recording my Friday and Saturday sessions in a few minutes. So if you want to see those, stay tuned. I will be doing 2 more live streams from this lovely balcony. Let me show you my view. It's not all that great. We're in Astoria somewhere. So again, that's the view that I have. So again, 2 more live streams coming Friday and Saturday. Take care of yourself. Have a wonderful day. Bye-bye.